Everyone, welcome to the KE Report, another daily editorial as we are chatting with Craig Hemke, founder and editor of TF Metals Report. Click that link in the show notes to follow along with what Craig is writing. Craig, as we always do, talking precious metals, gold and silver specifically. Look, overall, gold still holding right around that 2650 level. Silver still very much holding above that 30 level, but boy, oh boy, it's tested it a couple times just this month. But overall, I think we can say that some of this upward momentum that the precious metals had for majority of this year that really kicked into high gear in March when we started to get some gold breakouts, that momentum's lost right now. It's a sideways, maybe sideways to down market. Why do you think that's happened, Craig? Why has this momentum been lost for the precious metals?
Well, hi guys. Yeah, it certainly has at least a range-bound feel at this point, and invariably, all bull markets in precious metals seem to unfold with that two steps forward, one step back, and that's kind of where we currently are. Though this most recent step back, if you will, was more substantial than others, in that we actually made a kind of a lower low. Instead of a series of higher highs and higher lows, we finally made a lower low. But at the same time, prices have pulled back to about where you would expect. We got a full 10% pullback in gold, and then it recovered nicely, even with last Monday's big smash counting toward that. It's recovered nicely. And what's really silver is interesting here in that it pulled back right to where I was hoping it would stop and present an opportunity, and that was right at near the 200-day moving average. After silver broke out to 33 back there in May, it pulled back right to its 200-day moving average in July and then rallied from 27 up to 35. Well, last week, that's almost exactly what silver got down to. In the new front month, March, it got within about 10 cents of that 200-day moving average. So far, so good. That's about what we'd like to see. Seasonally, we're getting into a strong part of the year, December and January. So, you know what? Maybe things will surprise and some of that sentimental shift as we move closer into the holiday season.
Well, it's a good point you bring up, Greg, about the seasonality. We typically see the tax law selling between Thanksgiving and maybe the first couple of weeks of December. Definitely it's wrapped up before Christmas. And then the end of the year, we start seeing more interest coming into the sector. Beginning of the year, people take new positions. You usually see that Q1 run in January and February in the precious metal sector. Do you expect to see, I guess, that same kind of pattern play out like we've seen year after year? Or is this year going to be a little different because anything with the Trump administration coming in, any other wild cards you see on the horizon?
Well, it'll be interesting to watch the dollar index as we go through this month. As we record this here on Monday the 2nd, the dollar has bounced back strong today. But is it the dollar or is it the euro? The euro is really weak and making some really interesting moves downward. And of course, that's about 57, 58% weighted in the dollar index. So the dollar is rallying. Gold rallied overnight after falling sharply last evening. It rallied overnight in Asia and in London. And really, actually, in what was nice to see, it rallied at the beginning of the COMEX too. But then as human trading kind of dried up and volume dried up, well, then all of a sudden the algos took over and started pushing gold lower in almost kind of an automated trade with the dollar being up today. So to ultimately answer your question, Shad, let's watch the dollar index as we go into the month. It peaked right out at that 108 level, and that was an important level for it to stop last week, or I guess was late the previous week. If now the dollar index begins to pull back here this month of December and then into January, which is a lot of what it did during the run-up to the previous Trump administration, that'll certainly help us. And like you said, seasonally, this is a good time of year, so hopefully we can kind of salvage things a little bit this month, finish the year strong, post some really big green numbers that'll get even the attention of the generalists as the new year begins.
What do you think gets the attention of the generalists, though? Because we have started to see some inflows, especially into GLD. Traders were moving in to gold, riding that wave higher as it was consistently hitting all-time highs on a daily basis. The traders were in. Now they're distracted. So is it simply getting back to some all-time highs to suck them, again, back into gold, not even so much into the underlying stocks?
Yeah, it's a kind of multi-point question, Corey. One, I think Newmont and Barrick just crushed the gold sector in sentiment with their lousy earnings this last quarter that came out about a month ago. Even supposedly sophisticated, I shouldn't say supposedly, sophisticated, smart people like Stan Druckenmiller. When he decides he wants to get into gold, what does he do? He buys a GLD and he buys Newmont. I mean, come on, Stan, do some homework. But that's kind of, I think, a great example of how most generalists think. They just think, well, I'm going to get some gold exposure, and that's what they buy. They buy Newmont and they buy Barrick. And so when those turn south, when they inevitably, as they always do, fail to meet expectations because they can't control their costs, well, then sentiment on the whole sector seems to sour. Here's something, I don't know if we talked about this last week or not, guys, but it's something we'll want to watch as we go through the month, is where silver finishes on New Year's Eve. I suppose New Year's Eve is the last trading day of the year, whatever the last trading day of the year is. Because if you go back to 1980 or even 2011, we had these pokes intra-year up toward 50. The highest yearly close for silver is less than $32 an ounce. So if we want to kind of get some real attention on the sector, get more, I guess, long-term institutional buying, I think we want to look for a breakout on that annual chart. If we can get a rally this month, get silver to close north of 32, get that to be a headline, highest all-time annual high. That sort of breakout might get attention. We know about the link between silver and the mining shares that the algos seem to run. So maybe we'll watch silver this month and see if a pullback in the dollar or whatever could help silver post that highest annual close, because that might be something that could kind of kickstart us next year too.
Yeah, Craig, a lot of times the silver price and the silver equities are really what gets the animal spirits going, even in the gold sector. When you look at a lot of the better run silver companies and even the better run gold companies, they have a lot different charts than the ETFs do. So when you look at something like before they were even taken over, both Gato Silver and Silvercrest in the silver space, or Mag Silver, they've been running for a year or two. They've been running great. And it wasn't just the recent takeover news. They've been running way before that because they're quality run companies with good margins. When you look at the gold space, if you ignore the laggards, the big boys like Newmont and Barrick, and look at Agnico Eagle, Kinross, IM Gold, Alamos Gold, Wesdome, there's tons of companies that have really positive charts up and to the right, and they've been running for a year or two. So is it more of a stock pickers market where you just have to be more selective and pick quality, as you were alluding to, rather than camping out in indexes that have a bunch of junk in them that's dragging the indexes down? But there's still a lot of companies making some cake, both in the silver and gold space.
Yeah, and that makes it kind of a stock pickers market. You're right, Chad. That's a good way to look at it. In this age of just buying index funds or ETFs and having your exposure to whatever sector, it creates a little bit of a laziness. Now, at the flip side of that, if you're willing to do the homework, anybody's willing to listen to the stuff you guys talk about through the week, anybody's willing to find some good newsletter subscription writers that are able to sift through all of the drill reports and everything else and make sense of it all, anybody's willing to take that time, yeah, you're going to benefit. And you're going to benefit from that market inefficiency of something that should be priced higher than it really is. It's like, for example, and we're recording this day, AEM's back down today with all of the mining shares and back under its 50-day. But it lost its 50-day last week on that $100 down day and gold, then immediately recovered. And actually, the shares were up on the week last week, even after, again, that massive pullback on Monday. So, again, it does benefit the individual investor if they're willing to do their homework. And that's the hard part, And again, we're talking about a sector that isn't on a whole lot of people's radars in the first place. So, but if you're willing to do the work, there's definitely opportunities out there to make some fiat cash for sure.
Craig, is this going to be a long-term maybe problem for the precious metals stocks then? Because one thing that we might have just learned here is that even with the gold price doing really everything it could, moving up for the last 9 months, it did drag these stocks up, but it didn't drag them up. It didn't save them enough to make them a no-brainer for investors to go simply into the ETFs and play the sector as a whole. And yes, as much as we want to complain, people need to be more proactive, take individual company risk. A lot of investors don't, and they do want those ETFs that give them exposure to the sector. Is this a problem for the gold sector broadly? Because as much as the gold price runs, it doesn't save all these companies.
Yeah, no doubt about it. And you start getting into the smaller ones too, that just simply they burn a lot of cash, regardless of what the price of gold is. And I would imagine you guys feel this. I feel it. People listening to us probably feel it. You've had this great year in gold. I mean, depending on how we finish the month, it might be the best annual gain that any of us can remember. But yet we're all kind of like, I just was talking to David Morgan this morning, and he was down at the New Orleans Investment Conference, I guess, a couple of weeks ago. And he said, man, it was just dead. He goes, I thought it would be, all kinds of excitement. And he didn't sense, it was any different from any of the most recent years. So it is a challenge to get interest in our sector. And, you're making me think of another point we used to discuss too, Corey, back even 10 years ago. If you wanted dollar alternative investment, as even a traditional investment advisor or, a traditional investor, you looked at the gold and the gold stocks. Well, now with Bitcoin and crypto and Bitcoin ETFs and all this other stuff, that siphons away a lot of potential investment demand. And so I think that has really impacted that kind of rising tide lifts all boats idea of being in an ETF. So because again, there's just no flow, there's so little flow of funds, given that there's all these other alternatives now. So will gold find its footing? Will it move above 3,000 come next year? It's possible. And could that be enough to once again perk up the sector? Yeah. But gosh, it is frustrating, and it does impact your sentiment and how you feel about even, you can feel pretty good about the metal that you own and what gold and silver are trading at, but then, geez, you just can't help but be impacted by the almost, the aggravation sometime of owning the mining shares.
Yeah, great points, Craig. And we actually did see David Morgan at the New Orleans Investment Conference when Corey and I were down there. And I was at a function at the very end where I was asking people, are you buying? Are you selling? Are you holding? And I kept getting funny answers. The best one I got, Craig, was that people are nauseously optimistic. Not cautiously optimistic, but nauseously optimistic, because they felt sick to their stomach watching the gold price keep going higher and their basket of juniors not move as much. But I guess, do you think there's anything that could happen on the global stage from an economic standpoint, a macro standpoint, that could change up the narrative? Because right now, with runaway general markets, with runaway crypto markets, with the dollar strength, there's not a lot of reasons to be in gold or the gold equities. Is there anything on your radar that you think could change that narrative as we roll into 2025?
Boy, that's a tough one, Shad, because again, if we were having the discussion on December the 2nd last year, well, actually, that was a Sunday night. I remember it well. That was the night that gold opened about $50 higher and then was $100 lower by the end of the day. Anyway, if we were having the discussion back then, I said, don't worry about it, man. I know this is an ugly day, but by this time next year, we'll be talking, 2,650 or 2,700 or whatever. We'd be like, wow. And yet here we are, because we haven't. And again, primarily feeling frustrated because of the performance of the shares. I don't know what could happen macroeconomically that could change that. Outside of just factors that would continue to drive the precious metals higher, and then you hope that spills over into interest in the mining shares. In terms of getting those macro factors for the precious metals higher, we're going to need an environment where the dollar is coming back down. That'll certainly help. Probably will be. This is similar to what happened the first time Trump was elected. There was this big rally in the dollar and a dump in gold and silver up until about January, and then that all turned around into about September or October the next year. That may very well be coming again. In terms of other macro geopolitics, all these other things that could conceivably be driving a bid for gold that would leach out to silver. But for now, I don't see any reason why we wouldn't expect, if anything, just a return to the norm next year, 10 or 15% in gold. If that's the case, then we should be talking 3,000, something like that a year from now. Whether that's enough grit and grease to get the metals the mining shares actually do something, that remains to be seen. That's it. Let's hope it is, but gosh, it is frustrating to have had this type of year and still be talking about, gosh, why aren't the mining shares moving higher? I think we all feel that same frustration.
Yes, I think we do. But you know what? This has been a very good year, not just for gold. A lot of these stocks have actually done well. That's why I think unless you're in some of the smallest juniors and you bought stocks this year, you're actually not losing money. So we'll see. Obviously, investors want it to just keep on trucking higher, but kind of circling back to the start of this conversation, momentum has been lost, and we'll see when that momentum picks back up again. But hopefully, at least on silver's front, we get a holding of around this $30 level and not too big of a drop that could bring in some more selling. Craig, always a pleasure chatting with you again. Craig Hemke, founder and editor of TFMetalsReport.com. Craig, we'll chat with you next week.
All the best, Ben. Thank you.